What's going on, guys? Welcome back to another video. In this video, I've got one of my most important AMC videos that we are going to be doing this evening. So we have a lot of important concepts to cover, but we are going to be covering what we're seeing on the technicals for AMC right now on the longer time frames to give us an indication of where we could be headed over the next couple of trading days. In addition, the Ortex data for AMC and GME are getting absolutely insane, but there's some key things here that we need to understand before we talk about this concept of infinite short interest or infinite shares on loan and why we may not be seeing the increase in cost to borrow that we are expecting. There's a very, very simple explanation for this. And when we go through the logic here, retail investors as a whole, if this kind of plays out and retail investors are the ones whose shares are being rehypothecated, retail investors hold the keys to a very, very substantial forced share recall. Now, in addition to this, we are going to briefly touch upon some of these tweets in this article that was released today about what the SEC's actions are going to be over the next couple of weeks and months about kind of market reform and retail investor orders. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, we have a lot of really, really awesome things coming to you guys in the Discord. We are working on a brand new, fully built out 0 to 100 stock market and options trading curriculum for all of you guys that may be new. We have new bots coming. We have real-time options data coming, which you will be able to pull some unusual options data from coming in the near future. And again, the alerts, over 40 private live streams. If you guys do want to be grandfathered in before the price increases next month, make sure you check out that link down below. So AMC, not the best day today. Down about 50 cents or 4%. Now, when we take a look at this on the longer time frame here, the 4-hour, which I think is going to give us probably the best picture of where we're headed on AMC right now, we did have this 1348 crossover to the upside here. We were trading at about 1291. We ran to a high of about 1665, but what are we seeing now? A rejection up here at these levels, a 1348 cross to the downside. The MACD has flipped to the red as well. So right now we are in a little bit of a downtrend. I definitely think there is some more red that we could be seeing before we end up starting that move back to the upside. Again, guys, this is not me being bearish on AMC as a whole, but in the short term, I think we could see a little bit more downside. Now, again, this stock, AMC, GME, they move crazy. It's very possible that they just decide to have a mind of their own and start ripping, but this is kind of what the chart is telling me at the current time. Now, when we come over and take a look at the Ortex data here, let me just give this a quick refresh for AMC. There's a couple of key things that I want you guys to focus in on. The first, we have 23.31% estimated short interest, very high, 120.18 million shares estimated to be sold short, which I believe is an all-time high, 13.72% average cost to borrow, 19.21% max. Now, when we look at this on loan situation right here, the shares on loan for AMC, when we go all the way back to June 7th of 2021, the percentage of the free flow on loan, yes, it did increase back here, but this is the actual amount of shares that are on loan. Well, we're skyrocketing to all-time highs right now in terms of the amount of shares on loan. Right now, it's 181.87 million. I think free float on loan is the actual one that we want to use here. Yes, so this is going to be the percentage here, and we can see that this yellow line, the percentage of the free float on loan, let me see if I can get this to highlight up here, is really, really significant. And we see this number right here, 35.28%, really, really substantial numbers of the percentage of free float on loan. But why aren't we seeing the cost to borrow get as high as it was as in last year when we were seeing this amount of short interest, this amount of shares on loan, this percentage of free float on loan? And we are going to cover that in a couple of minutes. Now, when we take a look at GameStop short interest right here, 28.81% estimated short interest, 177% average cost to borrow, 261% max. Again, the stock short interest data right now is absolutely insane. Now, quickly, I do want to take a quick look at the option chain for AMC before we get into this infinite short interest, infinite shares on loan, and the keys that retail has right now in kind of figuring out potentially a way to force share recall or force a recall of a lot of these shares and force a lot of these shorts to get out of their position. So when we look at this data right here, for the monthly for June, it's not looking too good in terms of the options chain. Now, there is a potential for a gamma, but we need to get all these 126,000 put contracts out of the money and a lot more of these 262,000 call contracts in the money. Again, the option chain for July looks pretty crazy right now too. So there are 2 months in a row that we do have a decent potential for some pretty significant moves to the upside. Now, let's get into what we talked about in the title of this video so that you guys fully understand what we're seeing here. So first, this is going to be an illustration of how the short interest could potentially be infinite. Now, we're seeing these crazy short interest numbers on Redbox right now, which is like 160% shorted. But let's just go through this example very, very quickly and make it really easy for you guys to understand. So investor A, they own 100 shares. This could be me, this could be you, this could be any retail investor. Now, investor A's broker loans out the shares to hedge fund A. Now, I know a lot of you guys have seen this example before, but there's a very, very key thing in here that you guys have to understand. So now these shares have gone out on loan to the first hedge fund. Hedge fund A then sells these shares. The key thing here is, or the majority of these shares to investor B. The reason why we are saying the majority of these shares is that when we take a look at the shares on loan versus shares estimated to be sold short, there's about a 60 million share difference on AMC right now. So we just want to account for that difference. And that's also where potentially this rise in cost to borrow has actually come from. Now, investor B's newly purchased shares will become immediately available to lend after the settlement of these shares, which keeps supply and demand relatively stable in the securities lender market. Now, this is possible if investor B has share lending turned on. Cost to borrow increases, but not as much as we expect. Though the reason why the cost to borrow would increase is, let's just say that hedge fund A only sold the majority of those shares to investor B. So there is still going to be a decrease in the overall pool of the amount of shares that institutions are willing to lend right now. But there's still basically that rehypothecation aspect where the same shares can go out on loan multiple times. Now, this process can go on indefinitely as there's more people buying shares, more shares going out on loan, more people continually buying shares, and the process goes down. Now, institutions can play in this too, and they can play in a very big way. Institutions loan shares, but let's say they are buying as many more have already done. So let's say BlackRock with their giant share position is loaning out a significant portion of their shares, but they are still buying more shares. So it's possible that they are quote unquote buying the same share twice and also loaning it out twice. So what we're seeing here is a balancing act in the securities lending market where shares are coming in and out of basically the institutions, let's just call it their wallet or their kind of backlog of shares that is keeping these supply and demand metrics kind of in check, just specifically for AMC right now, which is why we haven't necessarily seen the massive skyrocket in the cost to borrow with 35% of the free float on loan. Now, here's where the forced share recall comes in that I want you guys to understand. So if this is going on right now, and it is retail investors who are allowing these shares to go out on loan. Remember, if you are in a cash account and if you have not directly told your broker to not put your shares out on loan, they are doing it. So if you do not want your share to be used against you, loaned out, sold, and essentially dilute the overall share price of AMC, then that is something you should definitely consider trying to turn off. Now, here's where the forced share recall comes in. If retail investors were the ones that were letting these shares slip by and going out on loan, if a massive wave of them then just decided, hey, I don't really want my shares out on loan anymore, and they turn off share lending, well, those shares are going to be recalled and put back into their accounts. What this process starts is it doesn't start from up here. It starts from that infinite number way down the line where investor A goes to investor B, goes to investor C, D, and down the line. So it would start from the bottom and go all the way back up as those shares are getting returned. So you can see the potential of this situation here if this is why the cost to borrow is not going up as fast as we would expect it to. So if you guys have any questions on that concept and what we are seeing here, make sure you drop a comment down below. Now, I do also briefly want to talk about this SEC situation and kind of give you guys a quick breakdown here. So Walter Bloomberg tweeted out this article right here, but the headlines are really the important things. The SEC could issue proposals on key stock market related rules this fall, sources say. Coming down a little bit further, this is the important tweet right here. The SEC weighs pushing retail investor stock trades into competitive auctions. The competitive auctions part is very, very important. It is no longer necessarily going to be who is going to pay the most for the retail investor order flow, but it is going to then be who is able to give retail investors the best execution price, which is everything that we have wanted all along. Now, again, it is the SEC. They have come out with that meme stock video, and I don't really have the fullest faith in the SEC right now in order to really enact some of these rules. But again, I do want to maintain that cautious optimism that they are going to come through eventually. I don't think it's going to happen very quickly, but I do think eventually these types of regulations and rules are coming. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I will see you guys in the next video.